Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We are recording this on Tuesday ahead of Thanksgiving, but by the time you hear this, Thanksgiving will be over, so we hope you had a very enjoyable Thanksgiving.
And today on the show, we're going to talk about how to invest like a shark. We are both big fans of the TV show Shark Tank. So if you're not familiar with the show, the sharks are self-made millionaire and billionaires. And entrepreneurs come into the tank and pitch an idea and try to get the sharks to invest in it. So we're going to talk about how Shark Tank can actually give us a few guidelines to follow in the stock market.
It does. And if you've seen the show, you know that all kinds of businesses come into the Shark Tank to pitch, right? And sometimes it's a fairly established company. Sometimes it's just a couple of kids and a dream and maybe a prototype, maybe not even a prototype in some cases. So this is somewhat similar to investing in stocks because you have thousands to choose from. Sometimes they're big caps, sometimes they're small caps, sometimes they're brand new IPOs. That's right. But the decision is still the same. You have to decide if the reward, the potential reward, outweighs the risk.
Now, here's the sharks, and they want to make money. Period. They're not going to invest in a company that is a charitable act. You know, if it's an idea that's big enough and it has a lot of potential for big sales, the sharks will sometimes compete with each other. And of course, that's where it gets fun for a piece of the deal. So really, the show can be quite entertaining watching the sharks argue. And they can get cranky.
They do. And they can really grill the entrepreneurs who come into that tank, again, asking for money for whatever it is that they're pitching. And we should all treat the stocks that we have on our watch list the same way. And to see how that works, we broke down their vetting process into basically three core questions. And they are, what's the story? What are the numbers? That's always critical when they're interviewing these people. And is the timing right?
Now, Kevin O'Leary, he always asks how unique the product is. He is the character of the sharks, I would say.
Mr. Wonderful.
Mr. Wonderful.
Mr. Evil in a lot of ways.
Yeah, a lot of people that don't like
Definitely
him.
Definitely the Simon Cowell of Shark Tank.
He is. Now, he asks, can it be easily copied or replicated by another company? Is it a wow product? Is it, it's all about the money all the time on Shark Tank. Now, in terms of stocks or newer IPOs, ask the same questions. Are millions of people going to use a certain product or service? And what are the sales potentials?
Now, one company that came to pitch the sharks was the Breathometer, and it was the world's first smartphone breathalyzer. And the market was there since most people have a smartphone, and unfortunately, a lot of people still drink and drive. But this app would let people test themselves before they got behind the wheel. And Mark Cuban invested in the company and others as well. And then on a later Shark Tank update, they showed that the sales were really soaring.
And what was interesting about this, Matt, is every single shark went into this deal. At the time, this was 2013, and they got the biggest deal in 2013. The sharks collectively invested $2 million in this, in the Breathometer, which is a lot of money.
Yeah.
And when you get every single shark on board, that means you have some sort of a hot idea.
Very rare.
Yes. Yeah. All right, now Lululemon, here we are. We're going back in 2012. The sharks are going to demand good numbers, the earnings and sales. Now, Lululemon was starting to make a major move in September 2010. And along the way, those quarterly earnings numbers were really looking solid. So Lulu's earnings rose 100%, 180, 114, 80, 60, 57, 73, and 50%. Those are just solid, terrific earnings numbers.
Right. So the sharks are asking, what are the numbers, right? And Lulu, of course, passed that test. They're also asking, what's the story? Now, at the time, Lululemon was making high-end athletic gear for women right at the time when the yoga zeitgeist was really taking off. So it had a popular product within a fast-growing market. And the third question that the sharks ask is the timing right? Now, for stocks, that really comes down to the chart, and that's how you answer that question.
Now, Lulu took off as the general market did, which is something often seen in our big winners. And at a quick glance, the volume really tells the whole story. Just look at it. Huge spikes in volume, skyscraper big, show the professional buying that was going into Lulu. Now, their clothes were higher end, well-made, colorful, stylish, and it became a fashion fad for sure, wearing these outside of doing just yoga.
Right. So the sharks are asking, what's the story, what are the numbers, and is the timing right? And for them, sometimes it's just too early. It's a prototype.
It's a hobby.
It's a hobby. It's not really ready for an investment. So the stocks are the same. You want to make sure that the stock proves itself before you get in. And sometimes the sharks do take the bait on some pretty wacky ideas.
Some really funny ideas. Okay, let's talk about some of these crazy ideas that have been on Shark Tank. We have the Wake and Bacon, which was an alarm clock that woke you up to the alluring smell of bacon. Guess what, Matt? They didn't get a deal.
Yeah, I don't think they want that kind of appliance right next to your bed.
There's a fire hazard. Fire hazard.
Yes.
And then there was the Man Candle with aromas including golf, football, and popcorn to overcome flatulent smells. Also, didn't get a deal.
Why ever not?
And then there was the device to zap pesky squirrels called the Squirrel Boss. Although it zapped squirrels, it may be a little bit humorous, it was viewed to be too cruel for the animal lovers.
Right, but sometimes a crazy idea does get money from the sharks. And one was what they called, I want to draw a cat for you, which is exactly what it sounds like.
I want to draw a cat for you.
That's right, he had his little boogieing going on. Now, a guy actually draws you a picture of a cat, and he wanted $10,000 for 25% of the company, and he got it from Mark Cuban. So how does this tie into investing? Well, you may take a risk on maybe a brand new IPO or a somewhat volatile stock that's on the rebound, that's showing some potential, but you're not putting a huge amount of your portfolio into that one stock. So obviously for Mark Cuban, $10,000 is not a lot of money, so he's willing to take a little risk with that, but you want to keep that in check. Don't go overboard with the risky ones.
Right. Now, this is one of my favorites. This was the Scrub Daddy. And the product had a huge success on Shark Tank. Now, it looks like such a simple little cleaning device. It's kind of like a sponge, but it was very unique. It could be used on a multitude of surfaces, including kitchen counters, pans, tire wheels, and it doesn't scratch the surface. It's also a really tough sponge. I bought a few at Bed Bath & Beyond, and I have to say, cheap little investment on my part, and it's an extremely useful household cleaner.
Right. Now, a lot of the times, the companies that step in to the tank to pitch, they're very young and they're untested, which is much like an IPO stock. So it's particularly important to really grill those new IPO stocks. Don't get caught up in the buzz and jump in before they prove themselves.
And a perfect example right now is Square. It made its IPO debut this week, and this technology turns a smartphone into a point of sale with a little square that fits easily onto a smartphone and allows for quick and easy processing. I've seen these used in taxis as I've been out on the road for IBD.
A lot of retailers,
yeah, smaller retailers typically use these.
Now, Square has been a pioneer in that fast-growing market, but it faces a lot of competition from some very major
Big players.
Apple with Apple Pay, Google has Android Pay, and of course, PayPal. So Square has shown impressive revenue growth, but where are the profits? So that's what they're going to nail you on in the Shark Tank, right? Well, you're making some revenue, but you're not making any money. There's no profit. So it's the same thing with stocks. And Square has yet to turn an annual profit.
Now, it's too early in the game to buy Square because it has not formed a base yet. But this may be a good one to keep on the watch list along with Match, which also made its IPO debut last week. Now, Jack Dorsey is the head of Square. Is certainly an interesting guy. He's also the CEO of Twitter, which he co-founded. Will he be able to help both of these companies succeed?
We'll have to see. So to invest like a shark, you want to ask these three questions, right? What is the story? What are the numbers? And is the timing right? And the timing really is key. So Square has promise, but in terms of that risk-reward ratio, right now, the pieces really aren't in alignment. Could happen down the road, but it's not there quite yet. You want any IPO to form an IPO base or a normal base and break out before you jump in.
Now, we get back to that question of supply and demand. Will there be enough demand for these devices, the Square, to propel the stock higher? Well, we'll have to wait and see.
Yep.
Like an edge that helps you pick winning stocks faster. An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
So let's pretend that we are sharks and we are evaluating a stock. We're going to use LinkedIn as an example. By the way, are you Kevin O'Leary? Who am I?
I'm not Mr. Wonderful.
You're not Mr.
I'm not
Wonderful?
going to claim that.
Are you Mark Cuban? Which one are
I
you?
wish.
You wish?
I'll take his bank account, sure.
Okay. So this was a hot IPO, just like Facebook, and everyone knew the name. So one of the questions the sharks ask is the timing right? Matt said this in the last episode. And with LinkedIn, it wasn't. We had the IPO. The stock chopped around a bit. It fell below the IPO pricing. The price movements were wide and loose for several weeks. The timing was definitely not right.
And that is definitely not unusual for a lot of brand new IPO stocks. And that is why we wait for one to form a new base before jumping in. But what about the other shark-style questions? What's the story and what are the numbers? LinkedIn was and is the clear leader in the social networking space for professionals. And it's built that strong niche that really differentiates it with Facebook. And it had developed multiple channels for getting revenue, including advertising and selling data to headhunters and recruiting agencies.
Now, starting in March 2011, LinkedIn's earnings rose 50% and sales were higher by 110%. For the second quarter reported in June 2011, earnings rose 57% and sales were up 120%. But the quarterly report for September 2011, they saw earnings drop to zero, but sales were still higher by 126%. But then, in December, the earnings report soared again. Earnings rose 140% and sales were up 105%. Matt, those are just big numbers.
They are. And so even though the chart, as we just saw, was in pretty bad shape at that time, those are the kind of numbers that make you want to pay attention to a company like that. So you wanted to have LinkedIn definitely on your radar screen. And the numbers stayed strong as LinkedIn set up a new base at the end of August 2012. It formed a cup with handle with a 113.10 buy point. And the outlook at the time was confirmed uptrend. So you might have bought into that breakout.
But the overall market went into a correction and the stock triggered the 7 to 8% sell rule. And so you got knocked out of the stock. You know, look, this happens. We've said this a lot of times on the show. When the wind is at your back, you can make much more money in the market. When the overall market is pulling back, most leaders will too.
And when the wind is in your face, you need to pay attention to that, right? Because that means something's not quite right. Now, as LinkedIn pulled back and the market showed that rising selling pressure and eventually fell into a correction, you could have gotten out even well before the stock triggered the 7% sell rule. But then LinkedIn did regain its footing. It started building a new base, and by early January 2013, the market was back in an uptrend, it's the right environment to buy, and LinkedIn was near a potential new buy point.
Now, it formed a cup with handle base, and within the base, it had a 4-week tight area before the breakout, which meant the price action was just holding super nice and tight. And then it broke out the week of January 11th, 2013, and it rose 4% for the week.
That breakout came about 4 weeks before LinkedIn was scheduled to report earnings. And by the time of the report in early February, you would have been sitting on about a 4 or 5% gain. That's not a big cushion, but it does give you a little bit of wiggle room to hold as a company gets ready to report. And it reported really well. And then LinkedIn bolted higher on those strong numbers.
And in the following quarters, LinkedIn continued to wow investors with triple-digit earnings. It had 6 out of 7 quarters of triple-digit earnings, and LinkedIn also had high double-digit gains. And those big numbers get the attention of the professional investor.
Now, fast forward to today, and after a huge run over the next 7 months after that initial breakout we were talking about, LinkedIn did go into a sharp decline. And using sell signals such as a sharp break below the 10-week line on volume, you could have locked in the bulk of those profits. Now, we're recording this on Tuesday ahead of Thanksgiving, but here's a look at where LinkedIn stands as of that day. And you can see this current consolidation as a first stage cup with handle with a 258.49 buy point. Now, the scenario here is, if it breaks out, would you buy it?
Well, within the base, LinkedIn has had some sloppy behavior. It had some big weekly sell-offs on huge volume, but it did tighten up and it soared higher after reporting earnings. And the accumulation distribution rating is also an A, so there was professional money going into it.
Right. So now to review a stock like LinkedIn or any other and answer that question, should you buy this stock, would you buy this stock, you can download a buying checklist from our website.
Now, if you have other simulations you'd like us to go through, send us in your thoughts at investors.com/investingshow.
So before we wrap up, we want to let you know that the next issue of the free IBD Extra newsletter comes out next week, and you can sign up for that at investors.com/investingshow.
Okay, see you next week, everybody.